What's up, guys? This is the Broke Executive, and today we are doing the October 2020 portfolio and dividend review update. So I'll be talking about what dividends I received in the month of September, how my portfolio performed, and what stocks I bought at the beginning of this month. So first and foremost, portfolio overview. September markets were down. My portfolio is no exception to that. I have an unrealized loss over the month of $128.28. This is purely capital gains. This has no bearing on the actual dividends I received, and it comes out to be about a 2.37% return in the negative direction. So, little unfortunate, but September tends to be a shaky month, as well as with the election coming up in November. That is something to consider. There is market uncertainty, and my portfolio is, again, no exception to that. However, dividends paid, I did receive $15.11 in dividends. This comes out to a monthly yield of about 0.3%, which annualized out over the course of 12 months would give me a 3.6% yield. This is right on par with where I'd like to see my account. I'd like to be yielding between 3.5% to 4%. That is a good dividend yield that's very sustainable for dividend portfolios, and it shows that I'm right on target for what I'd like to be receiving. So, dividend income change year over year. September 2019 was the last month I received nothing in dividends. So, as of next month in November, you guys will officially be able to see my income growth year over year instead of a divide by zero. That's pretty exciting. Looking forward to being able to show you guys that. But again, 2019, I did not receive any dividends, and 2020 received $15.11. So if we look at the next slide here, you can see that my monthly dividend income growth. Again, I have talked about this in the past video, but over here you can see this is a special dividend I received, and other than that, really no dividends up until October right here. So that's was paid out in October, so November is when that will show up. And then my account follows the low, medium, high pattern, and as you can see, September was no exception. This is the most I've ever received in dividends. And then these 3 months right here, October through December, those are the currently announced dividends. That's not the only dividends I will be receiving. So October I expect to be higher than July, November a little bit higher than August, and December should be a little bit higher than September. So you can see there is in fact growth. The trend line is trending positive, and even through the uncertainty of September, I did manage to increase my dividends paid compared to the third month of the second quarter. So in October, I actually spread out my purchases across my entire real estate sector. So I did not buy one specific company. I actually bought three. The first company I bought is Realty Income, also known as O. This is a staple to many dividend portfolios. I currently own 6 shares now, with the share I bought today at $60.75. The dividend yield of O is about 4.62%, and their yearly income is currently 2.81%. Although Realty Income does have one of the longest streaks of increasing dividend payouts at 23 consecutive years, where they've either paid the same amount or higher every single month of every single year. That is why this company is one of the kind of staple dividend companies that many investors look to and are very excited to be buying into, as well as with Realty Income, because they do grow that dividend fairly consistently. You can see their growth over the past 5 years has been 4.38%. This is actually a very good amount, especially considering where the dividend yield is currently at 4.62%. Realty is one of those companies that understands their financial spreadsheets and how much money they're making, and is very, very capable of making informed decisions on when to increase their dividend and how to safely do it, which is why they've been able to show such great growth over the past 23 years, as well as their dividend growth, and that is why it's one of the largest positions I have. The second position I bought is Welltower. Again, this is in my real estate sector. I owned 2 shares prior, and I picked up 2 more shares on October 1st at an average cost of $55.35. The dividend yield of Welltower is 4.43%, and this is a yearly income of $4.88 for the 2 additional shares I purchased. Welltower did recently reduce their dividend back earlier in the calendar year with everything else going on, As a result, they lowered their dividend to try to help keep the company safe and above water. I bought in after these dividend cuts happened because the stock price dropped accordingly with the dividend cut. And I thought that the lower yield as well as the lower price still made it a very appealing stock to want to be getting into. And I pulled the trigger and bought in. And I'm still continuing to buy in now. Welltower currently has a 1.82% dividend growth. That includes their dividend cut that they recently did. So you can see over the past 5 years, there is still a positive growth, which is another big reason that I was excited to be buying into this company. And I did again on the 1st of this month. Then my third and final purchase, I bought 3 shares of Stag Industrial. Again, one last time, this is in my real estate sector. And I bought 3 additional shares on top of the 5 I already own for 8 total. My average cost for this purchase was $30.80. Stag Industrial has a dividend yield of 4.72%, and these 3 shares gave me an additional yearly income of $4.32. Stag Industrial pays out monthly, very similar to Realty Income or O, and they have a very similar yield of 4.72 compared to O's 4.62%. So this is a very similar yield and payment schedule as Realty Income. Although they do not have 23 years of consecutive dividend increases, I feel Stag Industrial is one of those companies that will be able to get there one day, as well as you can see their 5-year growth is 2.08%. So a little bit slower than O, but this is a very similar performing stock if you look at the past 5 years, and being able to see monthly dividend payments through O and Stag and all of my other monthly dividend payments. This is again one of those companies that when you're just starting out your account, maybe you can't afford the more expensive stocks like O, but you still want to see those monthly payments. This is a great one to be getting into. It's about $30 a share. Prior to 2020 and everything that happened, they were trading a little bit higher. That is no mark against their own for the downturn that has happened, and they've actually performed very well, and they did not have to reduce their dividend through the calendar year of 2020 in order to maintain a positive balance sheet and keep the company in business. Then we will be moving on to my September dividends. This is a fairly long list, so I'll try to move through it quickly. I won't get too distracted. If it's a monthly paying dividend stock, I have likely referenced it in my previous video, as well as I'll be just mentioning again that they did pay out, and it's a very reoccurring thing, as well as there are some companies that only pay quarterly, that their payments did happen to fall in September. So the first one I got was Pfizer. This is from my healthcare sector. They paid on September 2nd, and I got $1.14 in total across 3 shares. On September 3rd, Discover Financial Service paid out, or DFS. This is the credit card company. So they're from my banking sector, and I received $1.76 for 4 shares. On September 4th, I had one of my monthly bond ETFs pay out at 14 cents. This is across 3 shares, and again, this one's one of those different ones. I'll be happy to talk about it in my sector review. I plan on starting those soon, and I will be able to explain why at 14 cents for 3 shares, this is still one of those great ETFs you want to be holding. On September 9th, I received 3 payments, one from Johnson & Johnson. This is a staple in dividend investing companies and portfolios. Received $1.01 from my 1 share. Then my other 2 bond ETFs paid out. These are also monthly payments. I received 5 cents for my 1 to 3 year treasury bonds, or SHI, and then my corporate grade bonds, or LQD, I received 30 cents for my 1 share. Then on September 10th, the next day, I received a dividend payment from Emerson Electric in the amount of $1 whole. On September 11th, Microsoft paid 51 cents, and shortly after, I believe within the day that Microsoft paid this dividend, they announced their future dividend for in December, and they actually increased their dividend. So it's going from 51 cents every time the dividend is paid out to 58 cents. So that's very exciting. It is a growth of their dividend. that did not cost me anything. It is simply more money in my pocket for simply owning the exact same share. September 14th, 3M paid out. They've been doing just fine and dandy all throughout 2020. I received $1.47 for my one share. On September 15th, this is where my 2 monthly real estate ETFs are from. So I have Realty Income and Stag Industrial again. These are both the pre-purchasing for October amounts, so I have purchased additional shares. So going forward, I expect to see higher dividend payments. Realty Income did pay $1.17 and Stag Industrial paid 60 cents. On September 23rd, one of my dividend ETFs paid out, SPYD. This is actually my smallest holding in my account, but I still received 79 cents from them. On the 25th, Bank of America paid out. This is my other banking sector stock. I received $1.26 from Bank of America. On September 28th, one of my other quarterly dividend ETF paid out, or SCHD. I received $1.09 between 2 shares. And finally, September 30th, the big dividend day, the last day of the quarter, the last day of the month, I had 4 different companies pay out. First and foremost, I have the Total Stock Market ETF I own, or VTI. I own 2 shares, and that paid out $1.35. Then I also received PepsiCo, or Pepsi, about an hour later in the evening, and my 1 share paid out $1.02. Then my monthly dividend ETF paid out 45 cents across 3 shares, and Union Pacific paid well late at night after I had gone to bed, so I woke up to see I received another 97 cents for my 1 share of Union Pacific. So next week, I was going to be talking about the video I wanted to be posting last week, but I kind of got into finals with my university and schooling, so I took the week off just to focus on tests, projects, and being able to pass my classes. I'll be talking about my biggest winner. What stock did I buy that has returned the most money, and the most percentage actually is the same company. When did I buy in? How much is it outperforming its sector? Will I be adding more of my biggest winner, similar to how I added more of my biggest loser or Delta Airlines? You guys have probably seen that video. If not, you can see the card right up in the corner right now, as well as I will have that video linked in the description. That's about all I really have to cover. Other than that, little housekeeping. You will notice my portfolio account has jumped about $500 since the last video, and I have been saying I only invest $250 a month. That's not a mistake on my part. That's a mistake on Robinhood's part. For some reason, they did my recurring deposit twice. So once the funds settle in the account, I will be withdrawing that dollar amount, or I'll just leave it in cash sitting in the account till the beginning of next month, and I'll use it then, and I'll just turn off the recurring deposits for now. So in reality, my account should be $5,037.61. Not really sure where the hiccup was there. I do know Robinhood was having high traffic today, so there could have been some kind of error bug within their system, but this does not really take away from the fact that Robinhood has been absolutely fantastic for me. I was still able to place all of my trades this morning, but regardless of their high traffic, I do not feel this takes away from the company, and I still have my referral link. If you would like to sign up to Robinhood, in the description below, you can get 1 free share when you sign up, as well as you could also sign up for Webull, get 1 free share valued between $8 and $1,600, and $1,600 is far more than I put into Robinhood, even when it bugs out and deposits my monthly contributions twice. So that would be a great head start for you guys. If you would like to let me know what you received in dividends, how much you received in dividends, you could either comment down below, or you could hop over to the Broke Executive subreddit. That link is in the description. So with that, I'd like to remind you guys to like and subscribe. I will be posting next week, like I said, about my biggest winner. If you guys want to see that video, make sure you have notifications turned on, and I will see you executives in the next video.